Hey guys, hope you guys are having a great day today, and welcome back for another weekly market analysis. I'm going to try to make this episode pretty short. I know traditionally I carry the episodes out to around 30 minutes or somewhere around there, and I would really like to keep them in the 15-minute range, maybe a 10 to 15-minute range, and if it goes a little over that, then that's fine, but I would like to make these a bit more bite-sized. There are a lot of you that probably really like the length that I usually do, but I would really like to try to get them a little bit smaller, if I could. So we're going to try to do that today, and yeah, we'll see how it goes, right? So unfortunately, I came into the market and I was looking at my currency pairs, and what I discovered was that a lot of the trades that I took just didn't really pan out that well. And this is a great lesson to ultimately go over, and it's just honestly that not every trade you're going to take is going to work out. In fact, a lot of trades you're going to take are not going to work out. And some weeks, some days, you're going to come into the market, you're going to take these trades, and for weeks, maybe even months on end, the trades just aren't going to work out in your favor. For example, the Aussie yen, not this particular Aussie yen pair, but or this particular Aussie yen trade, but this particular Aussie yen trade, as you can see, didn't really work out in the way that I clearly would have hoped. It just didn't really value the level that I thought it was going to value. I basically drew my fib retracement tool from this swing high to this swing low right here, and I thought that it was going to value that. Unfortunately, it didn't. Now, this is going to give us a secondary opportunity to get short and maybe have another successful trade off of it, but for right now, it didn't end up working out. Another one was, I believe, the CAD yen, yes, right here, which, as you can see, totally blew past the area that I thought it was going to respect. Again, I drew my fib retracement tool from swing high to swing low, put my entry point on the 618 fib retracement, and it just didn't respect that. I don't know if you would classify this as a complex pullback. We did kind of have an extension retracement extension, so I guess you could classify that as a complex pullback for sure. But yeah, it just didn't really work out the way that I had hoped, and it has continued to rally even higher. Again, this CAD yen pair, just didn't really work out, or this yen pair didn't really work out the way that I had wanted it to. And then there was a last and final one was the pound dollar, which I believe is here. This one was particularly disappointing because I thought for sure that it was going to go in my favor, and unfortunately it just did not. Now again, as you can see here, the market has been in a bearish trend, and we just decided not to value this particular structure level. So one thing that we might end up doing is maybe looking back at this and draw another fib retracement tool to see if we can get involved at a higher up here. So that being said, let's go ahead and jump into the pairs. So today we got the euro dollar. I found this probably on the 5th of last week, and unfortunately I just didn't really remember to actually post the idea. And what ended up happening was, in fact, I actually saw the market kind of retracing back up here, and I drew my fib retracement tool from this swing high to the swing low right here, and I put my entry at the 618 fib retracement, kind of like I normally do. And apparently it ended up getting hit on the 5th, and I just didn't, somehow I missed that. I'm not entirely sure how. What was the 5th last week? The 5th was, it was a Thursday. Okay, so I would have done my video probably on a Wednesday, and I probably was busy on Thursday, so I don't know. For whatever reason, I didn't miss it, so I'm posting it now. We did get involved here, and yeah, it's going in the direction. It looks like it's going to be a pretty good trade. We went ahead and calculated it out. If it wins, it's going to make about $148, which is really not that bad. So, and we're not really risking a lot in order to get it. So that's pretty good and amazing. I love it when we have opportunities like that. Here we have the New Zealand CAD. Again, I didn't really know when I originally looked at this particular currency pair. I actually had the mind to draw my fib retracement tool from this swing high to this swing low, and that's what the orange line is. The orange line here is the 618 fib level for this particular leg of the move, and I actually view this spot up here as the beginning of the move. Because we had this big bearish candlestick right here. So this little retracement starts the beginning of the next leg of the move, in my opinion. Now, many of you may think differently. Many of you may think that this was the beginning of that move. I tend to think it's this one. But that being said, sometimes the market can value the small retracements that are kind of in the middle. So like this retracement was the one I actually drew my fib retracement tool from. And there is a very good chance that the market is just going to rally and stop me out. However, there is, there's no guarantees. There is, of course, a good chance that could happen. But in the end, I figured I'd give this one a shot. And if it does stop me out, I could easily get involved in the larger retracement here. And that could work out in our favor as well. So we'll just have to wait and see. But just wanted to kind of run that by you. And whenever you guys see an orange line like this is usually a secondary entry point for me. So my entry points are always I always color them yellow, because I kind of view yellow as somewhat of a neutral color. You know, you got your red means stop or bad, green means go or good, and the yellow is kind of in the middle, in my opinion. So orange, again, is just another example of that. It's just, I will use orange or sometimes purple to represent, alternative entry opportunities that we might get if the original entry does not work out. So we'll just have to see. Hopefully it will value this structure level. However, if it doesn't, we have a backup plan. All right, dollar yen. So as you can see, I drew my fib retracement tool from swing high to swing low, and we got a 618 fib retracement. This looks pretty clear cut in my opinion. I don't really see a lot of issues with this. Again, the problem is that it's a yen pair, and like I showed you guys at the beginning of the video, the last 2 yen trades I've been taking have not really been working out. And there's some other trades that I took. I took another one on the Euro Aussie and another one on the dollar Swiss and the Euro Pound, and they're all going against me. So last week was just not good for me. But, I'm not going to lie to you guys. That does emotionally hurt. It emotionally hurts to have trades that don't work out. It just doesn't matter how professional you are, how good you are, it still hurts. I have one of my mentors, he's been trading for over 5 years. He's been consistently profitable for over 5 years. And he teaches traders how to trade. He's absolutely amazing. And even he says that, yeah, it hurts when you come into the market and you learn that your trades don't work out. It hurts. It emotionally hurts. But he's a coach, and he says, I give myself a little bit of pity party time, and then I move on and don't look back. And that's ultimately what you got to do with trading. So, all right, let's go ahead and look at the Aussie yen. This is the last currency pair that I ended up taking, the last one. So as you can see, this is where I originally drew my fib retracement tool from. That didn't work out very clearly. However, it did give us this opportunity for another 618 retracement from here. So I drew my fib retracement tool from the swing high up here to the swing low down here, and there was a 618 fib retracement right here. So hopefully we will have a second crack at this, and it'll go ahead and roll over, and we'll make up for the previous loss. We are overbought on the RSI. We actually went overbought a few times here. So I don't know. Honestly, we'll just have to wait and see. Now, many of you are going to notice these boxes that I drew up here, these light blue boxes, and these are structure levels that you can potentially look into when you're looking to take a trade. I would consider this to be a major structure level, or at least more of a major one than this one, and I would consider this to be minor, a very minor structure level. Now, let's be honest, I don't really know which one the market's going to value. Odds are this is a more significant retracement level, so I would imagine it would be better to wait for the market to come up here into a 618 retracement for this particular leg of the move, not this one right here, and kind of go from there. However, when you're waiting for a longer pullback like that, you could be waiting for days. You could be waiting for a lot longer, and sometimes you're never going to get it. Now, that might keep you out of a trade, but it might allow you to make money in that sense. And sometimes you can get that entry level up here. So let's go ahead and measure this out. It's not going to be perfect, but you guys will get the idea. So if the market was to come up here and hit the 618 retracement, there's no guarantee it's going to roll over at this point or at this point. What could very well happen is it could come up and hit the 618 retracement. It could totally end up reversing and have a bit of a trend reversal for a number of days, weeks, months, maybe even years. You never really know. But it's something to keep in mind, though, and that's probably one of the hardest things about this strategy is which structure level do you value? Which structure level do you take trades off of? If you want to take a trade off of the minor structure level, there's nothing wrong with doing that. But just know that you might end up taking a loss here before getting involved in a trade and taking a win here. So in reality, there really is no way of knowing. We are oversold on the relative strength index here, so that is a good sign for us that this is just going to continue to roll over. Also, we've been coming down here. We're definitely retesting this support level, and we obviously bounced off of that support level. So this is a great opportunity to get involved in everything. We got a lot of factors that are looking like the market is going to roll over and go in our favor. But again, nobody really knows. I know I say that all the time, and it's super annoying, but it's the truth. Okay, so here's another a trading opportunity on the pound dollar. This is on one of those currency pairs that just did not work out for me. I ended up losing about a hypothetical $143. Guys, again, I'm not taking these trades real time. Real time, yes, with real data, but I'm not taking these trades with real money, okay? That's very, very, very important that you make sure that you're not under the impression that I'm taking these trades live with real money, okay? This is all just analysis practice for me. I'm just practicing a strategy that I came up with a while ago. I haven't back tested this strategy on these currency pairs, and so far it's not profitable. It has not been profitable, me trading this strategy on these pairs. Now, there are a lot of pairs that if I was to back test them on, a lot of these pairs probably would go by the wayside and would probably not actually be pairs that I would trade because they're just not profitable enough. But for right now, I haven't really done that work yet because I'm in the middle of backtesting another trading strategy that I created. And we're just going to have to wait and see how that one works out before we jump into this one. And yes, I know that one is taking me a very long time to backtest, and I do apologize for that. But unfortunately, I got a lot of other stuff that I'm trying to do, and backtesting keeps getting pushed off the back burner. Just when you get really, really busy like I am, particularly like trying to build up your own company, your blog, your YouTube channel, stuff of that nature, things just tend to get in the way. And I'm not trying to make excuses or anything. That's the reality of it. Sometimes you just can't get to the stuff that you want to get to. And sometimes that can be depressing. I'm not going to lie to you guys. If I don't get done the stuff that I feel like I should get done, I get a little bit depressed about it. I'm like, oh man, I really should have gotten that done. And, I'm kind of upset that I didn't. And yeah. But the best thing to do is, regardless of how you emotionally feel about it, try to convince yourself that you're doing a good job, okay? You're still producing content. You're moving forward. And at the end of the day, that is the most important part. Just keep moving forward in your trading, in your business, whatever it is you're doing. Sometimes we just don't get the performance that we want to see. So we don't get the number of followers that we want, or we don't make the kind of money that we want in our trading, or we don't maybe... With the retail arbitrage thing that I'm engaging, sometimes a lot of the products they don't sell quickly. It takes a little while. I am happy to say that one of them has sold, but there are several other items that I went ahead and am attempting to sell and put out on the market, and they're not selling, or at least they haven't sold yet. Now, it can take anywhere from 2 to 3 months for them to sell, and they've only been on the market for a few weeks or so. So that is something to keep in mind. But guys, it can be depressing when things don't work out the way you want. The important thing is to just know that, be happy that you are engaged in the process, and be happy that you're moving forward. Because in the end, there's a lot of other people out there, guys, who won't move forward. They talk all day long about achieving financial freedom, owning their own business, not having to answer to a boss, anything of that nature. They talk all the time about that. And in the end, they never take any kind of action. They simply they go to work, they come home, and they don't want to work anymore. And hey, if that's you, I'm not trying to criticize you for that. But if you are unwilling to do the work, then don't complain about not having the money that you would want to have or not living the life that you want to live. If you want to live the life that you want to live, you've got to do the work, and the work sucks. Everybody knows that. The work is not fun. The work is just a drag. But you got to do it. You got to do what other people are unwilling to do, and most people are unwilling to do the work, especially if they have another job. Guys, I've been there. I know what that's like. And yeah, it's not fun. But you got to do it anyways. Okay, so here, like I said, we got another orange line here. That is for this particular structure level up here when I drew my fib retracement tool from this swing high to this swing low. However, in this case, for this particular trade, I drew my fib retracement tool from here. And the main reason I decided to do that, again, it's more minor structure level. You've got your major structure level up here. Let's draw this in. And then you got your minor structure level probably down here. Okay? And I'll be completely honest, which one would the market really value? Nobody really knows, like I always say. But I kind of thought that the market, given what the market is doing, we were overbought already and all that kind of stuff. I was under the impression that, we broke below, we closed below, we came back up here, and then we broke below again. So I figured that the market was going to retrace and give me a 618 retracement with regards to this particular move. Now, there's a lot of people who are going to come here and they're going to say, well, Matthew, that's not the move. The move was over here. Okay, well, to each his own, right? But for me, the move could be in both locations. For me, my trading strategy as it stands today allows me to subjectively choose which one I think is the best choice. And in the end, if the market works out with this one, then I guess that is the answer. But I drew a blue line here to identify where I found this. You see, I didn't draw this yellow entry line here in up until today. And so far, the market has not come back up and touched my entry point. So I'm not short here yet, which is one of the reasons that if you go look on my profile at Matthew_Spazzini, you're not going to see me re-entering into the pound dollar. This is the older trade. You're not going to see a new one up here. So right here, I always do this just to highlight when I found this, so I know that after this blue line, if it comes up and touches the yellow line, now I'm involved. And I think there's a good chance that could happen. All right, last but certainly not least is the CAD yen. The CAD yen is another one of those pairs that I got stopped out on. I actually originally drew my fib retracement tool from this swing high to this swing low. And yeah, as you can see, the market did not value that. Now, we're looking at this on the 4-hour chart, and I drew a lot of those boxes in for you so that you guys can see different structure levels that I see. And ultimately, the structure points that I see are right. This is a minor structure point. Maybe we could turn this to purple. Maybe we should have it where all minor structure levels are purple. I don't know. So this is a minor structure level in my opinion, and this is a minor structure level, and this is a major structure level. So that being said, guys, which one is the market going to honestly value and respect? And in reality, we're not going to know. Again, we also have a orange line here. Oh, first and foremost, I actually forgot to draw on my blue thing. My blue line. This is where I found the market. So the market has not touched my entry. I drew this after it had already touched it once. So if we get involved in this, it's going to have to come down and touch the entry again. Now, there is a very good chance that it could value this particular structure level. There was quite the retracement here, but I just don't know. Again, this is one of the hardest things about this trading strategy is which structure level is the market going to value. Now, this orange trading line right here, or this orange entry right here, is actually for this particular leg of the move, all the way up here. Okay? As you can see right there, this is the 618 retracement level for this swing high to this swing low. Now, this is definitely the beginning of the move. I wouldn't even bother to argue with anybody. Yes, this is the beginning of this extension of this leg of the move. Okay, but there are lots of little structure points in here that you could draw your fib retracement tool from, and honestly, you just whether you decide to draw it from here, or from here is ultimately just a personal choice. It's subjective. Okay, there really is no right or wrong answer in my opinion on this. If I say that it would be wrong to draw from here, most people will say, well, it's going to be wrong to draw from here, or maybe from here. Everyone's going to have a different opinion on it. So in the end, what is wrong for me with regards to my trading is not necessarily going to be wrong for you. Now, I'll be honest, if this particular structure gets violated, I'm already going to hit the 618 retracement for the major structure level, so I'm going to honestly say that this right here, I wouldn't even bother with the middle one. So I'm going to first take my first shot here, and then I'm going to take the second shot here. And if the first shot doesn't work out and the second shot doesn't work out, well, then I'm going to sit in my hands and wait. Now, in your trading, you may not want to take two losses like that. You may just want to take the one loss, sit on your hands, and wait later. Or you might just want to say, well, I'm only going to take the trade based off the 618 fib retracement from the starting of the actual leg of the move. And if that is you, then that's great. The problem is there are lots of trades where you may never actually touch that entry point. But you may have a higher chance of success too. I mean, you may have more winning opportunities if that's how you're going to trade it. In the end, you just need to backtest your strategy. Okay? Backtest your strategy. That's the only way you're going to know. That's the only way you're going to know as to which one is more valuable to go off of. Backtest a strategy where you're going to take the minor level, and then backtest a strategy where you'll take a trade with regards to the major structure level. Okay? That's the only way you're going to find out, guys. All right, I wanted to talk a little bit about the Excel sheet. So we had a few trades that came in. I already kind of talked about this. And as you can see, they came in at an unfortunate loss right here. Very, very unfortunate. Made me sad. But that's just the way it works. So, now our 692 profit winner is now looking like it's only $87 in profit. Now, unfortunately, we have 3 other trades that have not come to fruition yet that I took a little while ago, and we're still kind of waiting on those to come in. But when you look at them on TradingView right now, on the profile, my profile, they're really not looking like they're all looking like they're going to stop me out. And if that's the case, we're going to go back into being unprofitable again, which would really suck, particularly if I ended up losing $350 right here. That's not going to be fun. But we did take a few more other trades right here. There's another $421 winner. And yeah, we'll just have to see how it goes. All right, guys, I hope you guys enjoyed all that. If you guys haven't checked out the website, I highly encourage you to check it out. It's newmillenniumwealth.com. Sign up for that newsletter, and you will get exclusive access to content that will help you on your journey to financial freedom. Guys, also make sure to check out the Facebook page at New Millennium Wealth and the Pinterest page at Matthew Spazziti. And if you like this video, please don't forget to like and subscribe. And don't forget to share. Share this episode. Share the content that I'm producing, guys. Help me grow this community of individuals who all want to become financially free, and help me spread this message of liberty and financial freedom to everyone that you know. I think it's a message that everybody needs to hear. I think it's very empowering. I think it really will improve a lot of people's lives. Becoming financially free, controlling the source of your income, is the only way to truly be free in our world. And I 100% believe that, guys. So hey, if you guys believe that too, share the content, get the message out. If you guys will do that for me, I'll see you guys in the next episode. Remember, know the risks, plan accordingly, and have a great day.